On October 21st, 2025, in the midst of a bustling trading day on the NASDAQ market in New York, one company quietly drew the market's attention. It wasn't a household name or a tech giant. It was a small clinical stage biotechnology firm from Melbourne, Australia, Incannex Healthcare. The stock was trading at 36 cents, down roughly 4% from the previous close. On the surface, this minor dip seemed inconsequential, but underneath, something about the company's financial structure, timing, and decisions didn't add up. Behind those numbers, there was an unfolding story that defied business logic. Incannex Healthcare's most recent fiscal report revealed annual revenue of only $80,000, while net losses totaled approximately $47 million. A ratio like that, where losses are nearly 600 times larger than revenue, would normally spell crisis for most firms. In such cases, clinical stage biotech companies typically respond by cutting expenses, pausing risky programs, or securing external funding to stay solvent. Yet Incannex took an entirely different path. Against every conventional instinct, the company announced a $20 million share repurchase program, pledging to buy back its own stock, a decision that, on paper, appeared impossible. To put that into perspective, this was a company with negligible revenue, deepening losses, and no approved products, yet it committed to returning 250 times more cash to shareholders than it had ever earned in a year. The move was so counterintuitive that it sparked the first major mystery surrounding the company. Was it pure confidence, or was it calculated theater, a display meant to reshape investor sentiment? To understand this audacity, one must look at Incannex's pipeline. Its lead drug candidate, IXHL42X, combines dronabinol, a synthetic cannabinoid derived from THC, with azolamide, a diuretic typically used to treat altitude sickness and glaucoma. The target disease is obstructive sleep apnea, a chronic condition where breathing repeatedly stops during sleep. Traditionally, this is treated mechanically using a CPAP, continuous positive airway pressure machine, which forces air into the airway to prevent collapse. Incannex, however, aims to replace this machine with a single pill. The drug's mechanism, modulating respiratory drive and airway muscle tone through chemical pathways, represents a daring shift from mechanical to pharmacological intervention. In January 2025, the company announced positive pharmacokinetic data for IHL42X, showing that the compound achieved stable absorption and predictable concentration levels in the bloodstream. By April, it had completed enrollment for the Phase 2 portion of its Reposa Phase 2/3 clinical trial, and by May, dosing was finished. Everything appeared to be on track. But then something highly